India's growth engines have been slowing down, but they could well come to a grinding halt. Experts believe the third quarter GDP growth expected tomorrow could be the slowest pace of growth in the last 2 years. Quarter 3 GDP growth is seen at 6.1% versus 6.9% in the previous quarter and compared to 8.2% growth just a year back. Agriculture is expected to grow at 2.5% in quarter 3, while industry is expected to clock in a growth of just 4%. Mining and manufacturing growth may slow down even further in quarter 3. But now the big trouble staring at policymakers is a surge in crude oil prices.
Of course, price rising, it is a disturbing factor, no doubt. But it would be too premature to say that what would be its adverse impact in which sector. There will be adverse impact, no doubt.
Experts also believe that the last 13 rate hikes have not just denied growth, squeezed liquidity out of the system, but also has stalled any fresh investments. So will the RBI revisit its monetary policy stance and cut rates?
The RBI has been substantially constrained by a loose fiscal policy. Given that inflation was high, RBI had little choice. So if the fiscal situation has a credible correction, then the RBI has more room to maneuver in more speedily bringing down the short-term interest rate.
GDP growth projections have been cut from 9% to below 7% for this fiscal. A dismal GDP growth figure tomorrow will only dampen it further. Mrinalini Krishna, ET Now, New Delhi.